During last week, there was a temporary change in trading sentiment. In the middle of the week, bulls managed to assert strength. However, on Thursday, the quotes dropped again to the opening levels of the week. After the ban on gas and oil supplies from Russia, economists fear a new spike in U.S. inflation. Importantly, U.S. consumer prices are already at all-time peaks. Let's take a closer look at what happened in the currency, crypto and commodity markets. On Thursday, the US dollar index, which measures the strength of the greenback against the basket of six main rivals, settled at a weekly low. However, it managed to regain ground ahead of the Fed meeting. Notably, its results will be published on Wednesday. The index ended the week with a modest increase of 0.35%. There are again rumors about a more aggressive monetary policy tightening by the regulator. Nevertheless, given the current geopolitical situation, central banks need to take a more cautious approach. They have to find a way to curb growing inflation and boost economic growth. The ECB also held the March meeting. As widely expected, the watchdog decided not to change the current parameters of monetary policy. Inflation in the Eurozone is the highest on record, which means that the central bank has to take drastic measures. However, the ECB is hesitant to take a hawkish stance. The regulator makes from time to time statements about the possibility of monetary policy tightening, but it has little effect on market sentiment. Christine Lagarde said at a press conference that a faster tapering of asset purchases could be associated with normalization due to high inflation, but not with monetary policy tightening. As a result, the euro-dollar pair ended last week with an increase of 0.75%. Meanwhile, the pound sterling showed a clear dynamic. The pound versus the dollar pair shed 1.37%, declining from the target level of 1.3050. This is the lowest level of the pair since November 2020. The pair has already been decreasing for the third week in a row. Investors are still expecting another rate hike by the Bank of England. Besides, the regulator will hold the meeting this Thursday. Nevertheless, demand for safe haven assets remains strong due to the war in Ukraine. It limits the upward potential of the pound sterling. Bitcoin was steady last week. It failed again to break out of the sideways channel. It's unable to advance above $43,000 because of risk aversion. BTC kicked off a new week with a decrease amid news that the EU may restrict mining on its territory. The commodity market and the oil one in particular were in the stage of correction. Brent crude dipped to $110 per barrel. However, at the beginning of the week, it soared to $130.50 per barrel, notching a 14-year high. As a result, the weekly decrease amounted to more than 13%, the sharpest since November. Oil prices fell drastically because Europe would not join its allies' ban on Russian oil. Besides, there is a possibility of an increase in supplies from Iran, Venezuela and the UAE. Analysts have also warned that other OPEC members are unlikely to be able to fill supply gaps due to the oil ban on Russia, the second largest exporter of crude oil. It delivers about 3 million barrels of oil per day to European countries. Gold also lost momentum. Apparently, traders are factoring in an increase in the Fed's interest rate. Gold gave in to the US dollar and the 10-year government bonds, whose yield exceeded 2%. Moreover, gold is also under pressure amid hopes for a diplomatic solution to the conflict between Russia and Ukraine. Moscow and Kiev agreed to resume negotiations. The price of gold is consolidating near the level of $1,980 per troy ounce. You've watched Combined Financial Review on InstaTV with me, Anna Kasatkina. See you back soon.